Good morning, good afternoon, and good evening to all of you. This is the last part of our MCQ session. Already part 1, part 2, part 3 uploaded. This is the fourth part. In this part, we are going to discuss remaining chapters, whatever we are not discussed in earlier sessions. The first, we have to cover in this part assessment of various entities. Okay. Coming to the first MCQ, yes, SSC engaged in the business. That business established in SEZ, and what is the profit of SEZ unit? 25 lakh, and that is operated in SEZ from last 4 years. That is now in the 4th year of operations. You know, section 10 AA deduction is available for this entity. If you are doing the business in the first 5 years, 100% of export profit. Next 5 years, 50% of export profit. Next 5 years, 50% of export profit or reserve amount, whichever is lower. Now, what is the quantum of deduction available? If it is falls within the first 5 years, 100% of a profit, that is 25 lakh. Now, it is an old MCQ. It is an old MCQ. Now you know already, but I will tell you again. Individual, HUF, AOP, BOI, AJP. So now they are required to follow the 115 BSc by default. But if they want to change from 115 BSc, they can change it to old regime. But earlier, that means 3 years back. Yes. Old or normal or default on that time MCQ ma, this is a not updated MCQ, old MCQ. Yes, which regime is default one on that time? Normal or old is default. Yes, but they have an option to follow 115 BAC. Remember, this is an old point. Now, what is a default regime? The present assessment DS related 115 BAC is default. If they want to change from 115 BAC, yes, they can land it to normal. But earlier years, yes, HUF also, individual AOP, BOI, AJP, the normal or old is default. If they want to change from the regime to regime, they have to file the form number 10IE. Yes, HUF wants to pay the tax by using 115 BAC. What is that? What is the form they have to fill for shifting the regime? Old MCQ, outdated, but on that time, one time they asked, yes, that's why we included simply. Next, I think you know domestic companies can follow 115 BA, 115 BAA, 115 BAB. These are the optional regimes are available, yes, for the domestic companies. Yes, if these regimes, if they followed, additional depreciation is not available. Normal depreciation available, but the maximum normal depreciation rate, we can take only 40%. So more than 40%, even though if you are ineligible to claim also, that should be restricted to 40%. My registered trade union under section 10, they can take these two heads of incomes as an exempt. House property income, other sources income, if anything is there, that is completely exempt. Next, generally MAT rate is 15%. On the book profit, we have to apply the MAT rate at the rate of 15%. If the company located in IFSC, concessional tax rate will apply. What is the concessional tax rate? 9%. Next, once again, here, if any real estate investment trust, simply what business trust is paying the, yes, interest to the whom? Resident unit holder. Definitely in the hands of resident unit holder, it is taxable. Yes, now tell me who is an payer and who is an payee. Yes. So now payer required to deduct the TDS at what rate they are asking. If this is in section 194 LBA. If you want, I will show you. If you want, I will show you the provision also clearly from our handwritten. Just 1 minute. Yes, remember what is the tax TDS section number? 194 LBA. Here who are paying? Business trust is paying to the unit holder. In the hands of unit holders, that interest amount is taxable. That interest amount is taxable. And yes, in the hands of the unit holder, if the unit holder is non-resident, 5%. But in our MCQ, they are mentioned clearly resident. In the MCQ, they clearly mention resident. That means by using normal tax rate. That's why here payer is required to deduct the tax. Who is an payer? Business trust. Under which section? 194 LBA. If payee is a non-resident, 5%. But if payee is a resident or non-resident or foreign company, other any person resident, what is the rate? TDS rate 10%. So answer is 10%. Next, generally, if any mutual fund, simply investment fund, is paying the amount to the unit holders, Okay, that means simply if the mutual fund is required to distribute the amount to the unit holders, on that time they are required to pay the additional income tax. But if this mutual fund is located in IFSC, yes, on that time they are not required to pay any additional income tax, nothing but the old MTP question. So just try to remember, mutual fund normally required to pay the additional income tax. But in this situation, if that is located in International Financial Service Center, definitely we want to encourage the entities which are located in IFSC. What is it? Encouragement now we are giving the simply no need to pay any additional income tax. The MAT stands for the minimum alternative tax. Next MCQ, they are given the book profit. They are asking the simply what ma tax liability. So book profit into MAT rate, please apply 15% means 3 lakh. And yes, here surcharge is not applicable. Only health and education says you can apply. Then you will get the 3,12,000. They are asking the tax liability based on the 115 JB. 115 JB means nothing but MAT. Next, MCQ number 10. Sir, survey conducted. During the survey, which are identified, ma, please check it out. 10 lakh worth of the purchase of the goods are not recorded. Yes, sir. Purchased stock, but we are not recorded. So that's why definitely it is undisclosed income. That is 10 lakh. So here that last year business loss is there, as well as the brought forward business losses and current year business losses are there. We can't set off anything from the undisclosed income. Undisclosed income is required to tax under section 115 BBE. 115 BBE at the rate of tell me, ma. Already we discussed in basic concepts itself this MCQ. Yes, 60% tax rate, 25% surcharge, 4% health and education says, ultimately the 78%, that is 7,80,000. So nothing but. Next I want to introduce the two sections here, the very important. Section 115 BBF, section 115 BBG. Very important. Definitely you can expect these two in our exams, sir. Yes. If any, yes, sir. If any royalty income generated from the patents, if the patent is developed in India, that royalty income, if it is generated from the patent, that patent is registered in India, then that is taxable with a special tax rate under 115 BBF. What is the tax rate, ma? 10%. For that, you have to increase the surcharge and education cess, that is common. So 115 BBG, it is a carbon credit related. It is also like trading one. Yes, if any carbon credit is there, on that also special tax rate, carbon credit like one security, you can assume. If anything is transferred for the profit, you will get income. On that income also, SSEs are required to pay the, yes, what, at the rate of 10% tax. Yes, clear? So now they are asking the here by way of transfer of carbon credit, how much amount, ma? 15%, means nothing but the 15% into 10%, 1,50,000. Please add health and education says also, then you will get the what, simply you will get what, ma? 1,56,000. Next MCQ, yes, we have an business loss, ma, as well as unexplained cash credit. Unexplained cash credit is taxable under section 115 BBE, flat rate, yes, 78%. We can't set off any business loss against the unexplained income. Yes, if any unexplained income or anything is there, we can't take any deduction. Flat amount we have to pay as an tax. Can you tell me what is that amount? 20 lakh into 78% we have to pay. What is that? 20 lakh into 78%. How much it will be? 15,60,000. Next. This is also MCQ which covered in earlier session, but now we can discuss quickly. Listen carefully. Ma, generally partnership firm having the loss in this year 4 lakh. On that time 4 partners are there. That means yes, in that year loss is there, 4 partners are there. Okay, 4 partners are there, and what is the loss? 4 lakh. So definitely this loss we want to carry forward to next year's. Can you tell me what is the next year business income? Next year business income is, yes, 7,20,000. Before set off of this loss, we have an 7,20,000. Can you tell me? But in this situation, one partner is retired. So now, how much loss we can set off, ma? Remember that loss relating to retired partner is not eligible for brought forward. Continuing partners are 3. Please tell me 4 lakh divided by 4 means each and every partner related loss is 1 lakh. So 3 only continued from the last year. So that's why you can set up only how much, ma? 3 lakh. This is only MCQ. Yes, how much business loss we can set off in this year? How much, ma? 3 lakh. AMT provisions are required to be applied if the adjusted total income is exceeds how much, ma? 20 lakh. Up to 20 lakh, we can't, we no need to apply the what, ma? AMT provision. I think you know MAT is applicable for the companies. Remember, whether it is a foreign company also, domestic company also, MAT provisions are applicable. Other than company, we have to apply the AMT provision. If you want to apply the AMT provision, adjusted total income definitely more than how much ma? 20 lakh. So we have to calculate the adjusted total income into, we have to pay the 18.5%. AMT rate is 18.5. MAT rate is 15%. MAT rate is how much ma? 15%. Next one. Please remember, AMT rate is 18.5. MAT rate is 15. MAT concept shall not apply to the life insurance. For insurance companies, MAT concept applicable, but for life insurance companies, MAT concept is not applicable. Yes, if you observe, domestic companies can follow BA, BAA, BAB. Suppose if any company opted these sections, yes, in these cases, if company opted the BAB, MAT provisions will not applicable. Here, even though the company opted BA also, MAT provisions still applicable. MAT provisions still applicable. So, next MCQ easily you can say MAT is not applicable. If the company opted BAA, BAB, MAT is not applicable. For life insurance companies, already we discussed MAT is not applicable. Remember, for all insurance companies applicable, fire, marine, etc. But for life insurance companies, MAT is not applicable. So I think you know book profit computation, nothing but while computing the book profit, I think you know book profit, we have to compute book profit into 15% is MAT liability. But if anything is credited, yes, we have to reduce. In our P&L account, if anything is credited, we have to reduce from the, yes, we have to add it to net profit. If any amount credited to P&L, we have to reduce it from the net profit. In order to calculate the book profit, they are asking, out of the following, we can't reduce one thing. What is that? Other source. Sir, other sources related, if anything is credited to P&L also, we don't want to consider it as an adjustment while computing the book profit. These are the limited adjustments they given in the explanation 1-2, section 115 JB. In this section, they given the only limited adjustment. That adjustments only we have to consider. They are not giving anything about the income from other sources amount, anything is credited to P&L. Income from other sources amount, anything is credited to P&L. No need to do any adjustment while calculating the book profit. Next, what is that MAT rate? 18%. Already we discussed 115 BBF, that is royalty related. What is the tax rate? 10% as increased by the surcharge as well as health and education cess. Next, carbon credit related, immediately section number 115 BBF is royalty, 115 BBG is nothing but carbon credits. Next, mutual concern. These two incomes for that mutual concern always exempt. Remember, if any mutual concern is doing the business of insurance or if any trade or professional association, so definitely these incomes are exempt for the mutual association. Nothing but, yes, no one can do the business by himself or herself. Definitely we need to associate with each other for doing the business. Yes, that is only the mutual concern. If the mutual concern is doing the business of insurance also or trade or professional association, section 44A of the Income Tax Act giving the how to compute the incomes and all the things. These are all incomes are what exempt. Next, this is an amendment in our Finance Act 2025. Just listen, securitization trust can pay the amount to the resident investors. So securitization trust, simply investors will invest in the securitization trust. Who will invest? Resident investors will invest. So now we are going to pay the amount to them. We are required to pay the amount to them. So nothing but what we are paying here, so some amount of payment. Yes, we are making the payment. So now definitely in the hands of this fellow that amount is taxable. So that's why as an payer, you have to deduct the TDS. You have to deduct the TDS. Now here TDS required to deduct by using the 190. Yes, 194. Again, I will show you 194 LBA for business trust, 194 LBA for business trust. Now we have to use the LBC. What is that? LBC. Securitization trust is paying the amount to investor. Payer required to, paying the amount to the investor. Securitization trust is an payer required to deduct the tax. Yes, if he is a non-resident, rates in force, foreign company, rates in force, that means whatever the rates applicable in that Finance Act, others 10%. It is an amendment. Previously we have in different things. This is an amendment. Now you have to rectify this answer also. Now you have to rectify this answer also. Remember, what is that correct answer? 10%. Yes, remember, what is the TDS provision? 194 LBC. securitization trust required to deduct the TDS by using 194 LBC. Business trust can deduct the TDS by using 194 LBA. What is the TDS rate, ma? 10%. Please rectify this answer in your material. Next, ma. Now, ma, here same that business trust is paying the amount to the non-resident investors, the non-resident unit holders as an payer. What is that amount we are paying, ma? Interest. What is that amount we are paying? Interest. Payer definitely required to deduct the TDS. What is the provision, ma? You know already, business trust case always 194 LBA. LBA. You know already. Yes, what is the TDS rate? Already we discussed resident case 10%, non-resident is 5%. It is a printing mistake. It is a printing mistake. It is a 5%. Okay, so not printing also, the typo error, this is an 5%. It is not an amendment, ma. TDS we have to deduct at the rate of 5%. But this is an amendment. Securitization trust is required to deduct the tax. Securitization trust is required to deduct the tax. Can you tell me at what rate? 10%. Previously 25% or 30% is there. Now it is just what? 10%. So this is a typo error. The simply, yes, already we discussed LBA. Business trust can deduct the TDS by using the 194 LBA while making the payment of interest to the non-resident 5%, resident 10%. Next. Already we discussed this, the royalty amount required to taxable under section 115 BBF at the rate of 10%. What is that AMT concept? Alternative minimum tax. That means other than companies, if any low tax liability is there as per normal income tax provisions, we have to at least collect the alternative minimum tax. That means simply tax as per normal provision, tax as per AMT provision, whichever is higher. But this concept is applicable if adjusted total income of that entity exceeds how much, ma? 20 lakh. If company is engaged in the manufacturing activity, yes, they can go with the 115 BAB. The maximum rate of depreciation, this is a repeated MCQ. What is the maximum rate of depreciation, ma? 40%. It is also repeated in MCQ. What are the incomes of registered trade union? You can take it as an exempt under section 10, ma. House property income, other sources income is exempt. Next, they are given the question related to company, past exam MCQ, that is R limited. Yes, they are engaged in the manufacturing activity. What is the total income, ma? 35 lakh. Yes, they are asking the tax liability under 115 BAB. They are asking tax liability including all the things. That means 35 lakh into, please tell me, ma, 20, sorry, this is nothing but what? 115 BAB is nothing but 15%, 10% surcharge, 4% health and education says. I think it will be the 7.160, 17.160. Please apply on 35 lakh, ma. Please apply on 35 lakh. 35 lakh into, yes, nothing but how much, ma? 17.160%. That is nothing but 6 lakh 600. Next, they are giving the one more question. Yes, company case. Yes, company related, they given the normal provisions related. Yes, and book profit also. We have to calculate both the tax liabilities, whichever is higher only we have to calculate. So now we can compute here, tax as per the normal provisions. Tax as per normal provision. Please tell me, what is a normal provisions related tax, total income? 8 lakh 40. Always the turnover is less than 10 crores. So 400 crores exceeds 30%, but always it is less than 10 means nothing but it is less than 400. That's why we can apply the tax rate at the rate of what, ma? 25%. 8 lakh 40,000 at the rate of 25%. Plus you can apply the 4% tax rate also. 8 lakh 40,000, correct? 8 lakh 40,000 into 25% plus 4%. It is nothing but 2 lakh 18,400. So next, as per that AMT provision, if you calculated the tax liability, AMT provisions related, ma, adjusted total income into 18.5% we have to take. That should be increased by the surcharge and health and education says. But here surcharge is not applicable. 18 lakh 40,000. 18 lakh how much, ma? 40,000 into 18.5%. 18.5%. Further, we have to add the health and education cess. So now 18 lakh 40,000. 18 lakh how much, ma? 40,000 into 18.5% plus 4%. Yes, how much you will get? I think we are doing computational mistake. Book profit, sorry. We taken AMT rate wrong. So book profit related, we have to take the MAT computation. The MAT computation related rate is 15%. Extremely sorry for this. 18 lakh 40,000 into 15% plus 4%. Yes. In this MCQ, they are given the ignore surcharge and health and education says. That's why we can remove this 4%. Then you will get an answer. Yes. 18 lakh 40,000 into, yes, ma, 15%. 2 lakh 76,000. Now, whichever is higher. Whichever is higher, 2 lakh 76,000. Yes, please read thoroughly. Yes, whether they are asking the tax liability including surcharge as well as cess or not, or excluding. Next, they are asking the MAT rate. What is that MAT rate? 15%. Next, so now in book profits computation, how to calculate book profit? We have to take the net profit. For this, we have to do that adjustment. Then you will get book profit. Book profit into 15%. It is only what MAT liability. Now, what is the net profit? So, MAT concept is applicable for companies. Companies book profit means always we have to take from the Schedule 3 of Companies Act 2013. Sir, if any company is going for that applying MAT provisions, definitely they have to take a certificate from the chartered accountant in form number 29B. Just remember this form number 29B. Next, while calculating the book profit, we can reduce these things always if brought forward loss as well as unabsorbed depreciation as per books. Remember, it is very important. As per books of accounts, whatever that brought forward loss they given, whatever that unabsorbed depreciation is given, whichever is lower, we have to take. Sir, if that company is going for that insolvency procedures, section 241, 242 of Companies Act 2013 is applied, then we can take both the things. Otherwise, we have to take whichever is lower as per the books of accounts only. As per income tax records related, we have to consider in the normal provision tax computation. But if you want to calculate the MAT liability, yes, simply you have to reduce whichever is lower. Next. Yes, this is also typo error. What is the MAT rate? 15%. The minimum alternative tax is applicable. Yes, remember, if any tax imposed on the companies, now companies are paying the minimum tax or low tax. Now, simply normal provisions related tax liability we can compute, or the MAT we can compute. Whichever is higher only we have to pay. Simply, tax can be imposed on the, if any companies is paying the zero tax or low tax, definitely we have to apply the MAT concept. Automatically we will collect at least minimum tax from the companies. So now, AMT credit, if anything is there, we can carry forward to how many years? 15 years. So this is the marginal relief sum. Yes, here we have to calculate the marginal relief. Yes, through the marginal relief steps, please compute the tax liability. Definitely, you will get an answer. So I don't want to solve, already marginal relief concept by using that marginal relief. Why? For domestic company, definitely. Not opting the provisions means the domestic company is following the normal provisions. So automatically, surcharge basic limits are 1 crores and 10 crores. The more than basic limits, they are additionally in just 1 lakh. So that's why definitely there is a chance of getting marginal relief. So that's why please calculate tax liability by using marginal relief. Now, again, they are asking the tax liability only. The company covered by the BA. Remember, if 115 BA is applied, so if any company chooses the 115 BA, still MAT provisions will apply. Still for that company, MAT provisions will apply. BAA, BAB if opted, MAT provisions will not apply. Now, normal provisions tax liability we can calculate. So, normal provisions tax liability is nothing but how much? 24 lakh. So, 24 lakh into, yes, already 25% plus what? 24 lakh. Yes, what is the tax rate? 115 BA tax rate? 25%. Plus surcharge is not applicable. Why? Total income does not exceed 1 crore. Surcharge is not applicable. Remember, in this section, tax rate is 25% and surcharge depending upon total income. Next, health and education says, please calculate 24 lakh into 25% plus 4%, that is 6,24,000. How much? 6,24,000. That means simply if you calculated MAT, book profit into how much? MAT rate 15%. Okay, in earlier computation I taken instead of MAT AMT rate, that is also we can do in our examination, that is mistake. MAT rate 15, AMT rate 18.5. If company located in IFSC, then rate will be 9%. Now plus 4%. Please take 45 lakh into, what is that? 45 lakh into 15% plus 45 lakh into 15% plus 4%, 7,02,000. Now tell me, whichever is higher you have to pay. What is that higher? 7,02,000. Carbon credit related tax liability they are asking, 115 BBG will apply. If that is royalty, BBG will apply 15 lakh into 10%, including cess if they are asking, that is an 4%. That means 15 lakh into, yes, 10% plus 4%. That is nothing but 1,56,000. Next. Vinayak Limited, yes, normal question ma, they haven't total income computed means after all deductions. They are not opted any optional. That means the company going for the normal provisions only. They never got the turnover more than 50 crores. That means in every year the turnover does not exceed 400 crores only. So that's why what is the rate we have to apply ma, 32 lakh into 25%. And yes, surcharge is not applicable. Why? It does not, total income does not exceed 1 crore. What is the rate? 4% only. Health and education says 32 lakh into 25% plus 4%, 8 lakh 32,000. Next, already we discussed it. While calculating the book profit, definitely we have to do the adjustments, whatever they given in the explanation 1 to section 115, explanation 1 to section 115, explanation 1 to section 115 JB. But these adjustments we have to make to the net profit, then you will get book profit. On that book profit we have to apply the 15% for getting the MAT. But now they are asking how we are taking the net profit, from where we have to extract the net profit figure. Simply, if MAT concept is applicable for companies, nothing but the Companies Act 2013 schedule 3 net profit you have to take. Already this is a repeated one. What is the repetition? Simply while calculating the book profit, you have to reduce from the net profit unabsorbed depreciation or brought forward loss, whichever is lower as per books of account. They can give as per the books of account as well as income tax. We have to consider for book profit computation purpose as per books only, please take. If they are asking the PCBP or total income as per Income Tax Act, so then you can take the Income Tax Act related things. Next. So this is also we discussed. Normally MAT rate is 15%. If the company located in IFSC, what is the rate? 9%. Yes, next. It is very important. We can expect this in next exam also. Definitely. Sir, this is an AMT provisions related. You know already, normal provisions tax liability we can calculate. AMT provisions tax liability also we can calculate, whichever is higher. Sir, how I can identify? If any SSE other than company opted the section 10AA or specified business related deduction or 80 IA to 80 RRB if we claim, definitely we have to check. Definitely we have to check whether AMT concept is applicable or not. So now in this situation, what is the total income of 52 lakh? But in this total income of 52 lakh, yes, one amount is eligible for 80 IA, 100% of deduction we can take. Now, as per the normal provision, what is a GTI? 52 lakh. Minus, we can take the deduction under section 80 IA. How much 80 IA deduction we can take, ma? Yes, they clearly given that business income eligible for deduction is 35 lakh. Please remove. What is the total income? I think 52 minus 35 is 17 lakh. Please calculate tax on 17 lakhs by using the old regime. He is shifting out of the 115 BSE means nothing but what ma? He is exited. Now we can calculate 0 to 2.5 lakh nil. 2.5 lakh to 5 lakh is 12,500. What is the rate? 5%. 5 lakh to 10 lakh 20%. How much ma? 1 lakh. So nothing but 1,12,500 will be up to now. Next, above 10 lakh, 7 lakh is there into 30%. 7 lakh into 30%, we can use the M plus MRC, 2,10,000 totally plus 1,12,500 plus 4% also we can add directly 3,35,400 you will get as per normal provisions. Then AMT concept means you know already. We have to calculate the adjusted total income. For that calculation of adjusted total income, normal total income you have to take. For this, you have to cancel the whatever the deduction you taken earlier. Because of this deduction, only total income reduced. Please add back these things. Yes, 35 lakh. How much ma? 52 lakh. So on this 52 lakh, yes, if you calculated the AMT liability, 52 lakh into 18.5%, yes, plus surcharge also applicable. Why? Individual total income now exceeds 50 lakh. So that's why surcharge also applicable. For everything we have to apply the health and education cess. 52 lakh into 18.5% plus 10% plus 4%. You will get the 11 lakh 528. If whichever is higher ma, 11 lakh 528. 11 lakh 528 shall be rounded off to what ma? 11 lakh 530. The tax liability shall be rounded off to that. Next, dividend received by the real estate investment trust. Business trust is taking the interest from the SPV that is distributed to unit holders. Yes, I will show you the treatment. Remember. In introduction itself we have, remember, SPV given the interest amount and dividend amount. Now we are going to talk about the dividend amount. That is redistributed to whom? Simply unit holders. The first who is given the income to whom? SPV given to business trust. Business trust now giving the same amount to unit holders. What is that amount? Dividend. Tell me. Yes, in the hands of unit holders, that is taxable or not taxable, that is depends upon SPV tax rates. If SPV opted 115BA, in the hands of unit holders, that is taxable. If SPV opted normal provision, then it is what? Not taxable. Then it was not taxable. So that is only which answer is correct? Exempt when if that company is specified domestic company, taxable, yes, if SPV does not exercise the 115BAA. Understood? Yes, last one. Yes, last one, they given the 115BBF. The royalty amount is required to tax at the rate of what? 10%. This is only assessment of various entities related MCQs. So now we can start with the GAR chapter. Remember the GAR provisions. If any tax avoidance is there, the department wants to avoid the or prevent the tax avoidance. So that's why they introduced the general anti-avoidance rules. That is only one MCQ you can see. GAR stands for general anti-avoidance rules. Remember this thing, whenever there is a tax avoidance, the government required to prevent the tax avoidance. So that's why they introduced in act itself, in provisions itself, specific anti-avoidance rule. Whenever there is no specific anti-avoidance rules, in that cases we have to use the GAR, general anti-avoidance rules. Next, sir, when this provision is applicable, in between that any persons, if the transaction given the tax benefit is more than how much? 3 crores. If the tax benefit erases, that means nothing but this MCQ you can see. What is the tax effect? That means, okay, example, you and me entered into one transaction. We are getting that altogether, getting the tax benefit. Simply we are avoiding the tax if that is more than 3 crores. More than 3 crores or exceeds 3 crores, then only GAR provisions we can invoke. So here they are asking indirect way that MCQ. You can check that MCQ number 1. Yes, the tax benefit does not exceed 3 crores. The GAR provision shall not apply. The simply if, okay, in any arrangement means transaction, the tax benefit exceeds 3 crores, then department will apply the GAR provisions in the transactions. That is very important MCQ. We can expect this again in our exams. Next, GAR provision is applicable from this date. Please remember 1/4/2018. 1/4/2018. It is our December 2025 exam MCQ. Remember, sir, always, yes, assessing officer is given the reference to the, yes, approving panel. Sir, I am verifying the SSC return. I am an assessing officer. I am verifying the SSC return. In that return of income, I identified one transaction. For the transaction, whether we have to apply GAR or not, we have to decide. So, assessing officer cannot decide these things directly. Remember, so he can give the reference to the approving panel. So now approving panel required to give the order or direction within what time limit. So whether it is an A and B are entered into transaction. First of all, if it is an impermissible avoidance arrangement and the tax benefit also exceeds 3 crore, for this we have to apply the which provisions? GAR provisions. So now whether it is an IAA or not, AO will not decide. AO doesn't know about these things. So directly, yes, to whom we need to give the reference? Approving panel. AO will ask with the approving panel whether it is an IAA or not. Approving panel required to give the order within time limit. What is that? 6 months from the end of the month in which reference was made. Whenever we are making the reference from that month end, how many months? 6 months. Clear? Yes. The GAR chapter related MCQs also ended. Now we can start with another chapter. Yes. Next chapter, capital gains. The first MCQ related to the capital gains, clearly they are asking, what are the conditions required to fulfill one income required to tax under the head what mark? Capital gain. If it is an capital asset and if it is a transfer, definitely we have to calculate the capital gain in the year of transfer. So first condition number 1, there must be a capital asset. If that capital asset is transfer, we have to calculate the capital gain in the year of transfer. The answer is all the above. Now, capital asset excludes. Yes, capital asset excludes. Yes, remember, capital asset excludes everything, but it includes the what? Jewelry. I think you know. First of all, the capital asset excludes the personal effects. Capital asset excludes the personal effects. Now, in that personal effects, some are excluded. In personal effects, some are excluded. So, whatever that excluded from the personal effect, that means nothing but what? Includes. Includes in where? Capital asset. What are that? Jewelry. Jewelry, archaeological collection, nothing but jewelry, archaeological collection, work of art, all the things are includes. So nothing but stock in trade excludes only, personal effect excludes only, agriculture land also. So simply here, the rural agriculture land is excludes. But what is that includes? includes his jewelry. The long-term capital loss can be set up only against what ma? Long-term capital gain. The long-term capital loss can be set up only against the long-term capital gain. The next one, section 54 exemption, nothing but what is the section 54 exemption? If any individual or HUF transferring the, if any individual or HUF transferring the long-term residential house property by using the long-term residential house property, by using the long-term residential house property, if they are invested in the, if they are invested means purchase or constructed the another residential house property, we can get section 54 exemption. That means this exemption is applicable only for individual or HUF. Simply the residential house property can be held by these two fellows only. So that's why this exemption also applicable for them. Now this is an capital gain related. In that capital gain, yes, we are always discussing the one concept. In capital gain chapter, especially if you identify the surcharge concept in capital gain chapter, at the end we discuss. Now we can open that. Based on that, we can decode the last MCQ in the capital gain chapter. Sir, okay. What is that maximum surcharge for the, what is that maximum surcharge rates for the individual HUF, AOP, BOI, AJP ma? If they are following default tax regime, 25%. If they are following the normal provision, what is that? 37%. What is that? 37%. So now if you observe on these incomes means nothing but what? Four incomes. What are the four incomes? 111A, 112A, 112 as well as dividend income. The maximum surcharge rate we can apply only 15%. Maximum surcharge rate only we can apply 15. But if you observe in this case, in this last case, we have to apply how much ma? 25. But clearly the provision saying that maximum surcharge rate on these incomes, how much? 15. But remaining income if exceeds 25%, sorry, 2 crores, 25, remaining income if does not exceed 15%. Now here we can check, short-term capital gain how much ma? 80 lakh. Long-term capital gain how much ma? 70 lakh. Business income ma? 90. That means please tell me what is the total income. Please tell me what is the total income. 80 plus 70 plus 90. How much ma? 240. 240 lakh is there. Now in this case, maximum tax rate on the, yes, dividend income plus, sorry, long-term capital gain, short-term capital gain, what is that? 150 lakh related, we can apply maximum 15% only. Even though your income exceeds 2 crore, if exceeds 2 crores, 25 we have to apply. Don't apply. On this capital gain, please apply how much ma? 15%. But other income, what is that? 90 lakh. If other income exceeds directly 2 crores, 25. Other income alone does not exceed how much ma? 2 crores. How much ma? 15% only. That means what is that answer? All incomes related surcharge rate is how much ma? 15% only. So capital gains also over. Now, yes, ICDS we can discuss. So now, as per ICDS 2, that inventory valuation cost formula, these are all are there. So specific identification, first in, first out, weighted average is there. There is no LIFO also. There is no LIFO also. And there is no simple average also. That's why what is that? Recognized cost formulas above 3, which are not recognized as simple average as well as LIFO. ICDS applicable for whom? First option, ICDS, income computational disclosure standards, are applicable for all SSEs, but we can't apply the ICDS for the individual or HUF who are not having the what tax audit. For all it is applicable. For all it is applicable, but we cannot apply towards the whom? Individual or HUF who don't have any tax audit. If individual or HUF having tax audit, for them also we can apply the ICDS. But here, individual or HUF not having the tax audit, that's why we excluded. The remaining SCs, ICDS is applicable. ICDS 10 is talking about the contingent assets and contingent liabilities. That is ICDS 10. If any government grant we received, asset cost, that government grant related to depreciable assets. Sir, if any grant received, that asset cost will be reduced. That's why we have to deduct from the WDV of the block. WDV of the block. Sir, ICDS are applicable only for these two heads, PCBP as well as income from other sources. Your option relevant one is nothing but PCBP. The borrowing cost meaning, so borrowing cost means not only interest cost, any commitment charges also, commissions also, brokerages also, premiums also, discounts also, whatever we paid related to the borrowings, that all the things we can call it as what borrowing cost. The government grants nothing but ICDS 7. Government grants means ICDS 7. So nothing but ICDS 2, the valuation of inventory is applicable. So nothing but here the separate ICDS is there. That is nothing but ICDS construction contract, ICDS 3 is there. So nothing but shares and debentures related, we have an ICDS 8 is there. That means securities related ICDS. So here the machinery spares, the tangible fixed asset, ICDS 5 is there. ICDS 5 is there. Remember, the valuation of inventories are applicable. Even though these are inventories also, the separate ICDS is there. So that's why these are excluded from the scope of ICDS 2. So ICDS 3 comparative construction contract, that is an accounting standard 7. Sir, whenever we are receiving the grant related to depreciable asset, we are reducing it from the block. If any grant we are refunding because of conditions are not satisfied related to grant, automatically we have to refund whatever the grant we received. Here we are reducing. Now, if it is refunded, we have to do what? Add. Whenever we receive the grant, asset cost will reduce. The same treatment we done in PCBP chapter also. Whatever the grant we received, treatment we should reduce from the block. Whenever we are going to refund the grant, we should add it to the block. Next, ICDS 8 deals with the securities. ICDS 6 deals with the, ICDS 4 deals with the revenue recognition, 6 foreign exchange operations, 5 tangible fixed asset. Sir, ICDS is applicable for only 2 heads, the PCBP as well as income from other sources. ICDS 7 is dealing with the government grants. So this MCQ also, whatever we have in the class, that is also refund of government grant. Can you tell me the government grant, if anything is refunded, what is the treatment? So it will be added to the bottom block. Remember, if any government grant is received or related to capital asset, now we are going to give the refund. What is the consequence? Simply, we have to add it to the block. So, if added to the block, what is the meaning? If added to the block, depreciable value will increase. If you are adding to the WDV format, depreciation will, block value will increase, depreciable value will increase. Further, we can take the what? Depreciation. That is only indirectly they given. Sir, if you are added some amount to the block, we can get the depreciable value more in the next years. Automatically, we can get depreciation on that more value. So this is only next MCQs also. My ICDS 8 is talking about ICDS what? 8 is talking about the securities valuation. Sir, in your accounting standards, sir, you are going to value the securities cost or fair market value, whichever is lower. Here also the same, not security wise, script wise or category wise. Equity shares do one valuation. Debt one valuation. Nothing but no need to follow each security wise. We have to follow category wise. ICDS 8 clearly saying that we have to follow on what basis? Category wise you have to do. Category means nothing but here do calculate total cost. Calculate NRV. 800 plus 1500. 2300. Here 900 plus 1200. How much ma? 2100. Whichever is lower na? 2100. Next debt securities related. Yes, total 1500 plus 1000. How much ma? 2500. Yes, 1400 plus 2000. How much ma? 3400. Yes, whichever is lower, category wise lower, you have to check 2500. Total, if you are doing, that is 4600. These are MCQs related to ICDS. Next. So, TDS TCS MCQs. So, what is the lottery amount she won? 10 lakh. So, now that amount is credited means what? Net amount. In computing the total income, what is that amount we have to show? Grossing up amount. Can you tell me what is the grossing up amount? Ma? Simply 10 lakh is representing the yes net portion. Now what is that 100%? What is that 100%? Now net amount representing after making that, so nothing but 30% tax amount. 4% health and education cess, that is nothing but 31.2. That means after deducting the tax of 31.2, how much amount we can get it as a credit? 100 minus 31.2 is 68.8% representing the net. Yes, ma? Now, what is that gross amount? Please do the class multiplication. Yes, the 10 lakh into 100 divided by 68.8. That is nothing but, how much we got? 14 lakh? 53,490. This is an correct answer. Okay. Next. So this is an already covered in advanced tax and interest. 2011A. If any TDS amount is fails to deposit after deducting, if anything is fails to deposit, you deducted from the payment, but you are not depositing. It is a serious offense. Not serious offense, serious consequence. Why? We are deducting while making the payment of amount to our payee, but we are not depositing with the government. Now we have to pay the interest at the rate of 1.5% under section 2011A. Next, Yes, it is nothing but the TDS provision. Yes, nothing but the interest on the deposits from the banks. Now I will open the TDS summary. By using the TDS summary, easily we can complete all these MCQs. Listen carefully. That is nothing but interest other than interest on securities. It is a deposits related interest. That's why interest other than interest on securities. What is the threshold limit? 50,000 in case of normal. In case of resident senior citizen, yes, how much ma? 1 lakh. If they are receiving the amount from the banks, here we are receiving amount from the bank only, right? What is the threshold limit? Yes, 50,000 normal person, 1 lakh senior citizen. If exceeds, then bank will deduct the TDS. But here it does not exceed. That's why TDS is not applicable. So nothing but here 194A is applicable or not applicable? Not applicable. Why? It does not exceed the threshold limit. If bankers are required to make the payment more than these amounts, in case of normal person 50,000, in case of senior citizen 1 lakh, then only they will deduct the tax at the rate of 10%. Now, another MCQ, fourth one. Yes, 194 IB. Yes, 194 IB, that is TDS related to rent. Yes, TDS related to what ma? Rent. TDS related to rent. Listen carefully where we have. Okay. Yes. The rent amount, if exceeds the 50,000 per month or part of the month. Amendment. Previously we, it is not amendment, it is an amendment. So now, if that exceeds the 50,000 per month or part of the month, then we have to deduct the TDS. At the rate of how much ma? 2%. Can you tell me? Now here for 3 days itself 80,000. It exceeds or not exceeds? Exceeds. While you are making that payment, definitely we have to deduct 80,000 into 2%. How much ma? Yes, 1600. This is wrong. 1600 is correct. Next. Sir, how much amount we are receiving from the lottery? 10 lakh. But for purchase of the ticket, we incurred 20,000. We can't give any deduction. This direct amount required to tax under the head income from other sources. Remember, is there any deduction available against the winnings? No. Flat amount required to tax. 194J. Remember, if any individual or HUF taken the services for the personal purpose, here Janak is an individual. He taken the services for the personal purpose. Even though that exceeds the threshold limit also, 194J related TDS is not applicable. Why? Individual or HUF is taken the services for the personal purpose. That's why even though that amount exceeded the threshold limit also, TDS provisions will not apply. Next. Sir, now Rakshita is an cost accountant. Raised a full bill. How much amount ma? 3 lakh. But charged separately GST. So separately already we showed the GST. Now we have to collect TDS the only on the excluding GST portion. Already it is an excluded. What is a TDS rate under 194J ma? What is a TDS rate? Sir, why the professional? So nothing but 194J, professional services. She is doing the cost accountant profession. That's why that is nothing but 30,000. So GST portion excluding whatever that amount of professional fees is there on that we have to collect. Now 192A. 192A. What is that 192A? TDS on premature withdrawal. Yes. If threshold limit exceeded 50,000, 10%. Yes, threshold limit exceeded. Yes, 10%. That is nothing but how much? 14,000. So motor car related TCS provision 206C subsection 1F will apply 12 lakh into 1%. That is whatever the price of the motor vehicle, 12 lakh into 1%. How much ma? 12,000. So now, so nothing but employer will give the form 16 to whom? Employee. So whatever the TDS deducted by employer related to the details that will be given to employee. What is that? Form 16. Next. TDS rate on the plant and machinery. So nothing but the TDS rate on the plant and machinery. 194I plant and machinery related TDS rate. If that monthly threshold limit 50,000 exceeds, what is the rate? 2%. Next. Lottery tickets related 10,000 in a lottery. If that exceeds 10,000 for single activity, amendment previously per annum limit, now they are given the single transaction if exceeds. But here exactly 10,000. That's why no need to deduct the TDS. Next here also. Yes, 194 IB TDS, 194 IB. Monthly we are paying how much ma? 60,000. It exceeds the rent we are making the payment monthly 60,000, which is more than 50,000. That's why we have to deduct the TDS at the rate of what ma? 5%. That is only if you observed IB. Okay, so it is 2%. Sorry. Yes, IB rate is 2% only. Yes, please change this 2%. Next ma. Virtual digital asset 194 STDS provision will apply. Yes, 1% of the sale consideration. That means yes, we can apply 6,05,000 into 1%. How much? 6050. Yes. What if any payee not submitted the PAN? We have to deduct the TDS at the rate of what ma? 20%. Repeated MCQ, plant and machinery related TDS rate under section 194I is 2%. Next, one more thing. ABC Limited credited the amount. ABC Limited is making the payment of the professional services 28,000, fees for technical service 27,000, but altogether how much ma? 55,000. So remember in 194J, threshold limit is separately available for that each payment. In 194J, the separately TDS threshold limit is available, not accumulated professional services separately. For everything separately, how much ma? 50,000. So, but here 50,000 not exceeded, TDS not applicable. Here also 50,000 not exceeded, TDS provisions are not applicable. Next, sir, here 50,000 only making the payment of rent. What is the threshold limit for the rent ma? Threshold limit for rent more than 50,000 per month. Here only 50,000. Exceeds, then we can deduct the TDS. Exactly. So that's why TDS provisions are what ma? Not applicable. TDS provisions are not applicable. Next. So 18th MCQ, just listen. 18th MCQ, just listen. This is 194M. 194M. That is nothing but for whom 194C is not applicable, for whom 194J or 194H, these provisions are not applicable. For them, we have to check 194M. Yes. Can you tell me here? Yes is that there, that means yes, as well as another SSE is Bima. How much amount here making the payment ma? 46 lakh, but in 194M threshold limit is 50 lakh, so that's why here TDS is not applicable. Remember, contract, professional services, commission, as well as what ma? Brokerage related. Yes, whenever there is no these provisions applicability, we have to check 194M. Threshold limit ma? 50 lakh. Here not exceeded, that's why no need to deduct the tax. That's why clearly they given yes is not required to deduct the TDS. But in case of Bima, altogether definitely it exceeds 50 lakh. Please check ma. 18 lakh plus 23 lakh plus 15 lakh, that is 56 lakh, which exceeds. That's why we have to deduct the tax. We have to deduct the tax. Clear? Next. Last MCQ, I think. Remember 194I as well as IB related, rent related, amendment done. Yes, remember here 194I applicable for the all SSEs, individual or HEF, who having the what last year tax audit. So for others, this provision will applicable. Rent only payment, but if any company SSE, others are paying, or individual or HEF who having the what tax audit in the last year, if they are making the payment of rent, 194I. Others, that means nothing but other than the, means nothing but whom individual HF who are not having the tax audit in the last year. So threshold limits are 50,000. If exceeds, then we have to deduct the TDS here 2%, here 2% as well as 10% based on the hired asset. Next, last MCQ. Here, non-resident related, sir, for non-resident, yes, the TDS provision, general TDS provision is 195. Partnership firm is paying the interest or any other interest things to the non-resident partner. So now we have to apply the general TDS rate at the rate of what rates in force under section 195. So now we can discuss the other MCQs. Please remember, it is a rent-free accommodation taxable value. So rent-free accommodation taxable value, if you observe, so we have to take the salary definition. Yes, salary definition, basic salary, dearness allowance, forming part of retirement benefits, bonus, fees, commission, other taxable allowances. But here they given only something. That means basic salary, 1,50,000 into how many months? 10 months. As well as dearness allowance, that is 50% into 10 months we received. 10 months we are received. This is only the salary. On this salary, the taxable value we can identify by applying the 10%. 10% of salary is taxable value of rent-free accommodation here. Can you tell me 10% means nothing but how much you will get? 1,50,000 plus 75,000 into 10. Yes, into 10%, you will get 2,25,000. The same MCQ we have in this page also. Yes. Where we have? We can check. This is only. Balu is an yes discontinued from the yes November. Before November, how many months? April, May, June, July, August, September, October. 7 months. 7 months he received the salary. Yes, 1,50,000 into what is the salary? 1,50,000. That means basic as well as dearness salary. 7 months into taxable value of the rent-free accommodation is 10% of salary. Our assumption, the population is more. It is an owned accommodation. The population is high in high limits. That is 1,50,000 into 7 months into 10%. How much it will be? Wait, discontinued from the November till October. Sorry. He discontinued from the business and later he joined in the company. That means how many months he worked in the company? Yes, November, December, January, February, March, April. Okay, March. That means nothing but 5 months. So here the 5 months only. Simply they given the, he discontinued from his business, joined. That means nothing but 5 months only. 1,50,000 into 5 into 10%. That is 75,000. Other MCQs we can check. So this is nothing but section 24, house property. How much interest on borrowed capital we can take. Very easy. Very easy. This is an current year interest. Current year interest directly we can take it as deduction. Pre-construction period, that means this interest is related to pre-construction. The pre-construction interest we can allow in that how many installments ma? 5. So nothing but 8 plus 9 divided by 5 is 3.4. 11 plus 3.4 is nothing but how much ma? 11 plus 3.4 is 14.4. When residential house is transferred, yes, you can acquire the 2 residential houses, no problem. Once in section 54, if you transfer the one residential house with the consideration, you can purchase 2 more residential house. But remember, vendor, if your capital gain does not exceed 200 lakh, that is simply you can remember it as an 2 crore. Sir, if my gross capital gain is 3 crores, can I get 2 houses exemption? No, only 1 house exemption you can get. So next it is an house property question. You have an rental income. Yes, that is an 50,000 into 12. 6 lakh is an GAV minus municipal taxes. We paid the municipal taxes now for the present year as well as the past year. How much? 1,20,000 you paid. Then you will get the 4,80,000 minus standard deduction 30%. Yes, 4,80,000 minus 30% if you taken. This is only house property taxable value. Already we discussed in the capital gain chapter. Just remember, what is that? Maximum amount of the surcharge we can apply on the 111A, 112A, 112 as well as dividend income 15%. Even though your total income is more than 2 crore, more than 5 crores also, surcharge rate on other incomes you can apply 25 or 37. But in this, you have to apply how much ma? 15%. Next MCQs. Sir, what is a taxable perquisitor? First 3 are, we can take exemption, but actually whatever the amount paid to the domestic servant, it isn't fully taxable. So it is a capital gain computation. While you are calculating the capital gain, if you taken any asset as a gift from the others, so now if you are calculating your period of holding, the period of holding including the previous owner holding period, so nothing but from this date we have to calculate the period of holding. Even though you are transferring today also, now also, but period of holding means now father given the gift to me, now I am transferring. What is the period of holding? Not only my holding period, father period of holding also I have to include. That's why the period of holding starting from this date. Next. Sir, if any enhanced compensation related interest if you received or compensations if you received, that is in capital gain. Interest related to compensations received, that is an taxable under the head income from other sources. Flat 50% you can take deduction. The remaining amount only you can tax under the income from other source. Flat 50% deduction is available. Next. Sir, we are receiving the amount is in 7 lakh. That means 7 lakh means nothing but how much ma? Net amount. But purchase of lottery tickets we paid 20,000, but we can't take this as a deduction. But gross amount we have to show in our total income. What is that gross amount? 10 lakh. Nothing but net amount if you taken it as a 30%. What is that gross amount ma? 10 lakh. Next, government employee related. If you want to calculate taxable value of leave salary, you can take the cess, whichever is lower of the following is exempt. The statutory limit or mandatory limit, nothing but leave salary or last done salary, 10 months average salary, like that you can take the 4 numbers. Whichever is lower, you can take it as an exemption. But remember, what is the statutory limit for them? 25 lakh. Next, the same MCQ. So interest on borrowed capital. How much we can take maximum on the self-occupied properties? If SSE opted the old regime, maximum 2 lakh. If SSE opted the new regime, 0. Interest on borrowed capital we can take only in case of self-occupied properties under old regime. That to maximum how much ma? 2 lakh. Even though you paid more also, but we can take only 2 lakh. Here we paid the more, but we taken the what ma? Here we paid more only, how much ma? 2 lakh 60, but we have to restrict to 2 lakh. But if they are given the question, SSE is following the 115 BSE, what is that interest on borrowed capital in case of self-occupied property ma? Interest on borrowed capital in case of self-occupied property, 0. So next, this answer also we have to amend. Yes, this answer also we have to amend. Cryptocurrency is a virtual digital asset is required to tax under section 115 BBH at the rate of 30%. 9,000 into 30% now we have to pay. Plus long-term capital gain 112 year. So automatically up to 1,25,000 we can take it as exempt. So it is not at all taxable. Why? Long-term capital gain STT paid means nothing but listed equity shares related long-term capital gain, that is completely exempt because it is less than 1,25,000. Short-term capital gain now it is taxable at the rate of what ma? 20%. Previously 15 now 20. So 35,000 into 20%. So plus they are not asking the surcharge and education cess ma? 35,000 into yes 20% plus sorry, 35,000 into 20% M plus 9,000 into 30% M plus MRC. How much? 35,000 into 20% M plus 9,000 into 30% M plus MRC. Okay, this is wrong only, definitely, because we taken that is wrong calculator. 35,000 into 20%. Next one, 9,000 into 30%, 9,700. This is right. 9,700 is right. Okay. Ma previously here 15%. Ma remember it is a short term capital gain 111A because STT paid listed equity shares related short term capital gain. Now it is an MQP question related to this. Just listen. Brought forward long term capital loss. Brought forward short term capital loss. Remember, ma short term capital loss is there. Long term capital, sorry, short term capital gain. Now first we can set off these two, but how much extent we can set off, ma? 85,000 only. Because long term capital loss can be set off against the long term capital gain. What is the long term capital gain after set off, ma? 0. But balance, how much we can carry forward, ma? 96,000 minus 85,000, 11,000 loss you can carry forward to the next years. Next, ma, short term capital loss is there. How much you can set off here? Yes, 1,75,000 minus 42,000 you can set off entire 42. But what is that short term capital gain is taxable? Long term capital gain is 0. Short term capital gain after set off it will be 1,33,000. What is the taxable capital gain in this year? 1,33,000. So next they are asking the what is the tax liability on transfer of virtual digital asset? Please tell me what is the tax liability on virtual digital asset, ma? Simply 115 BBH will apply at the rate of 30% and TDS rate 194S at the rate of 1%. That's end with the other MCQs also.